Hey, it's Richard Geller here. What can you and can't you do with commercial funding today? I'm going to talk about this. What you do in commercial funding is you find people who want to borrow for commercial purposes, real estate, business expansion, and what you do is you introduce those people who need to borrow with hedge fund lenders, and then you make money as a finder. You're a hedge fund originator. It's very cool. We have our own hedge fund, and we are raising a third fund right now. We have direct lender relationships so that if you bring us a deal, we can actually either place it with our own hedge fund or with direct lenders that we've actually done business with, people we've done deals with. Our competition would kill for these, and so when you work with us, you're working with direct lenders. We can do a deal from $100,000 to $100 million or more. If it's a larger deal, what we'll do is we'll share the deal with other folks, just like everybody else does. And what I got as a question, how are our guidelines compared to X, Y, or Z's like somebody else? I want to explain that. Nobody can sell oil at $50 a barrel if the market's $80 a barrel. There's a market for everything. For example, gold right now as I speak is around $1,100 an ounce. Nobody can sell gold for $400 per ounce or $1,500 an ounce. Gold's market is $1,100 an ounce. You can't earn $100 an hour for washing dishes. There's a certain pay scale, a market for dishwashers. There's a market for everything. And there's a market for loans. No one can lend money to borrowers that nobody else would lend to. There are loans that can and can't be done. For example, right now, FICO scores need to be on 680 for most loans. We do have a loan product where we can go down to 600, but in general, FICO scores have to be 680. If they're not, there may be a possibility of doing that loan, but everything else has to be super good to compensate. As I said, there are a few exceptions, but in general, that's the market. Also, today, loan-to-values are very conservative. 50% on some deals, 65% on some. You can go 80 or 90%, but that generally is going to be for government-guaranteed loans like SBA or USDA loans. Everybody else is going to be below 80%. That means that right now, also, that when a loan is made, a lender has to have an exit strategy. That means the lender has to see how the borrower is going to pay back the loan so the balance is zero, or more often, they're going to want to make sure that that loan can be rolled over or taken out by a permanent lender. If there's no permanent lender on the horizon, then a loan isn't going to happen. The exceptions are a loan that is going to be paid off, like an amortizing loan. But generally, most of the commercial loans are 3, 4, 5 years. At the end of that time, the borrower is going to have to refinance. And so the lender making that 3, 4, or 5-year loan has to know who's going to refinance. If they don't see someone that's there to do a permanent loan, they're probably not going to make the loan. So how do you get good deals? Find borrowers that have good credit, collateral, and track record. They should have a good FICO score. They should have excellent collateral, good, reasonable loan to value, and a track record in the business in which they're in or trying to get in. Make sure they have an adequate down payment or adequate equity. If they don't, they may have IRA money they can tap into. They could get a checkbook IRA, and then they can actually write a check for that down payment. We have a whole system for doing that. And if they're in trouble, if they own a property or in trouble, chances are it can be possibly worked out where there can be a loan modification done. And we teach you how to do that. Make sure you can speak directly to the borrower. If I was to circle one thing and say this is the most important thing of all that's in my message, that's it. If you're going to be a hedge fund originator, you need to make sure you can speak directly to the borrowers. If you're only speaking with a broker, you need to get to the borrower. If you can't get to the borrower, it ain't going to happen. We have approvals for loans, and if we can't get to the borrower, then they don't really realize what's going on. Their information is being filtered through one broker or through another broker, and they're not going to sign the papers. Explain your credibility as an originator. You want to work with someone who's a direct lender, and you want to be an originator for a direct lender. Make money in the commercial crash. You don't need any of your own credit. It's easy, not like flipping or short sales. It's not pie in the sky. $2 trillion in loans and commercial property need to be reworked. You can make a lot of money in it. Are you ready? Leave a comment at our blog, commercialfundingmillions.org/success. commercialfundingmillions.org/success. If you're watching this on YouTube, there'll be a link that you can click on. Leave a comment. Tell us what you want, how you can get it, and what is stopping you. And what we're going to do is we're going to offer a free course to one of the people that leaves the best comment. What you want, how you can get it, what is stopping you. commercialfundingmillions.org. Richard Geller, take care. Talk to you soon. Thank you. Bye-bye.